Good morning, ladies and gentlemen. I welcome you to the virtual dissemination workshop on the 2020 survey on foreign private investment and investor perceptions in Zambia, hosted by the Bank of Zambia in close collaboration with the Zambia Development Agency, the Zambia Statistics Agency, and other balance of payments committee institutions in Zambia. Before we proceed, allow me to recognize the presence of the Bank of Zambia Governor, Mr. Christopher Mbunga, the Zambia Development Agency Director General, Mr. Mukula Makasa, the Zambia Statistics Agency Interim Statistician General, Mr. Malenga Musepa, and the Bank of Zambia Director for Economics, Dr. Jonathan Chipili. Ladies and gentlemen, my name is Nkacha Kavwe, Manager for Strategic Communications here at the Central Bank, and it is my honor and privilege to be a Master of Ceremonies for today's virtual event. Allow us to proceed, Lord. Kindly allow us to proceed. It is now my honor and privilege to call upon the Bank of Zambia Governor, Mr. Christopher Mbunga, to give his opening remarks. Governor, sir.
Thank you very much, Master of Ceremony. Good morning, everyone. I take recognition of the presence of permanent secretaries, the Chief Executive Officer, Zambia Development Agency, the Interim Statistician General, Zambia Statistics Agency, ambassadors, high commissioners, and representatives of the development partners present, captains of industry, distinguished invited guests, members of the media, ladies and gentlemen. Let me begin by welcoming and thanking you all for joining this virtual dissemination workshop of the 2020 survey on foreign private investment and investor perceptions in Zambia, the 13th survey we have conducted so far. Due to the changing circumstances caused by COVID-19 and the need to stay safe, this workshop is for the first time being held virtually. We therefore appreciate your effort to join us in this virtual meeting. The COVID-19 pandemic has presented an opportunity to transform the way we conduct surveys through the greater use of digital platforms. You may wish to know that the 2020 survey was conducted using technological platforms to exchange information with our respondents in a secure and safe environment. The Bank of Zambia and its collaborating institutions are grateful to the respondents for participating in the survey and thank you most sincerely for your cooperation. We also appreciate the efforts by the Balance of Payments Technical Committee comprising representatives from the Zambia Statistics Agency, Zambia Development Agency, Bank of Zambia, and other collaborating institutions for successfully conducting the 2020 survey. Distinguished ladies and gentlemen, this year's survey response rate was 56.4%, a significant reduction from the 82% recorded in 2018. The lower response rate is attributed to reduced working hours, rotational working sequences, and work from home arrangements induced by the COVID-19 pandemic. The slow response during the survey prompted an extension of the survey period to 2 months from the 2 weeks period that the survey would normally run. This delayed dissemination of the survey results, which traditionally takes place in December of each year. Several respondents were slow to adjust to the electronic data collection methods. However, we trust that this will be improved in future. I should actually hasten to say that at the rate of 56%, although it's lower than the previous year, and given the circumstances and the change in methodology, it still looks successful. The continued participation of various enterprises in this exercise is extremely important as it generates information that is critical for making policy decisions. The information we collect is key in assessing developments in the balance of payments, which has important implications for the formulation of sound monetary, fiscal, and trade and investment policies. Distinguished ladies and gentlemen, the 2020 survey captured the magnitude, types, sources, and the direction of private investment for the year 2019 and the first half of 2020. It also included investor perceptions on the investment climate in Zambia. Let me now turn to key findings from the survey which is the subject of our discussion this morning. Ladies and gentlemen, private sector foreign flows into Zambia were $357 million in 2019 compared to $924 million in 2018. The decline was largely attributed to debt repayments by the mining and quarrying and manufacturing, deposit-taking corporations, as well as information and communication sectors. Nonetheless, foreign direct investment liability flows grew by about 50% to around $800 million in 2019. The significant increase was mainly due to related party borrowings of almost $1 billion, mostly in the mining and quarrying sector. As a result, borrowing from foreign affiliates increased to about $11 billion from $10 billion in 2018. This contributed to the increase in the stock of private sector external debt to $15 billion at the end of 2019. Switzerland continued to account for the largest share of the debt stock. Distinguished ladies and gentlemen, turning to the sectoral performance, the mining and quarrying sector was the leading recipient of foreign direct inflows in 2019, amounting to about $400 million. However, the rise in inflows was moderated by losses recorded in the sector. The manufacturing sector was the second highest recipient of foreign direct investment with about $240 million, followed by deposit-taking corporations at $90 million and electricity sector at $54 million. Distinguished ladies and gentlemen, the first half of 2020 recorded a net outflow of foreign direct investment of about $250 million compared to net inflows of $412 million recorded in the corresponding period in 2019. This was largely attributed to the significant increases in losses, mostly in the mining sector. Over the same period, private sector foreign asset flows contracted by about 32% to $447 million from $656 million in 2018. The decline was due to the reduction in currency and deposit holdings by deposit-taking corporations. Distinguished ladies and gentlemen, with regard to investor perceptions, market potential, peace and security, political stability, favorable tax regime, good infrastructure, and non-fiscal incentives were identified as the main motivating factor for investing and reinvesting in our economy. Despite the deterioration in the ease of doing business, interventions in the foreign exchange market, as well as the reduction in the policy rate by the Bank of Zambia, were seen as positive measures that supported business activity. However, the increase in the rate of withholding tax on dividends, interest earned, and remittance of branch profits to non-residents, as well as increased government borrowing, both domestically and abroad, were cited as having adverse effects on the businesses. In addition, COVID-19 pandemic was perceived as a risk that was likely to constrain investment by limiting access to markets and raw materials. In conclusion, respondents' views are that easing the adverse effects of the COVID-19 pandemic on the businesses, restoring macroeconomic stability, attaining fiscal and debt sustainability, and restoring growth and economic diversification will support the private sector. This, in addition to addressing high lending rates, problem of policy inconsistency, perceived high levels of corruption, inefficiency of the public service, improvement in infrastructure, and instability in the tax regime. Further, respondents were of the view that government needs to take appropriate measures to enhance dialogue with the private sector. Finally, I wish to thank you all for joining the discussion through this digital platform, and hope that you will use this opportunity to delve into survey findings and recommend appropriate measures to improve the overall business environment in the country. I would also wish to thank all the participants who conducted the survey and the respondents for your responses, for the great work done to get to this point where we've now got a document which we will discuss this morning. It is now my honor and privilege to open the workshop and wish everyone success and fruitful deliberations. I thank you for your kindness and kind attention. May God bless you all. Thank you.
Thank you to the governor. That was the governor of the central bank, Mr. Christopher Mvunga, who was giving his opening remarks. And now it is my honor and privilege to call upon Mr. Malenga Musepa, who is the interim statistician general at the Zambia Statistics Agency, who will serve as our session chair for today's event. Sir?
Thank you very much, and good morning. Let me just recognize the governor of the Bank of Zambia, Mr. Christopher Mvunga. And Governor, allow me to just write on your protocols and also welcome the media and all colleagues and friends. Let me welcome everyone to this virtual dissemination for the 2020 survey on foreign private investment and investor perceptions in Zambia, whose theme is fostering investment and diversification towards economic recovery and sustainable growth. The period covered is 2019 and the first half of 2020. We basically have two key presentations, which each presentation will take 30 minutes and immediately move into next presentation, 30 minutes. The first one will be quantitative survey findings of foreign private investment in Zambia, to take 30 minutes. The other one will be investor perceptions on investment climate in Zambia, another 30 minutes. Thereafter, for 15 minutes, we're going to have a representative of the industry surveyed to come and give some remarks and then open it up for plenary. So without wasting so much time, I would like to call upon Dr. Jonathan Chipili. He's a director of economics at the Bank of Zambia, who will make his presentation on quantitative survey findings of foreign private investment in Zambia in 2020. Thank you very much, Dr. Chipili. You have 30 minutes.
Thank you very much, Chair. Good morning, good afternoon, good evening, as the case may be. So the session has been introduced. Yes, so this is the outline. So focus on for the benefit of people who may not have access to the screen. So I'll just look at the survey coverage, look at the global trends, regional trends in FDI, and then give the highlights on the outcome of the survey relating to the stocks flows of the private sector foreign assets and liabilities, and then I'll give what the key message from the survey is in the conclusion. Oops. So, yeah. So in terms of the coverage, the data focused, the survey focused on the stocks and flows of the foreign assets and liabilities of the companies operating in Zambia, and also those that invest abroad. We also had a component of investor perceptions, and the focus period was the entire 2019 and the first half of 2020. We targeted 250 companies, but we only managed to get responses from 141 companies, which gave us the response rate of 56%, which is lower than the historical response that we've had over the years. And the reasons were explained by the governor, so I don't want to go into details of that. As you can see from the, sorry, let's go back. As you can see from the screen, the response rate was highest among the deposit-taking institutions, followed by ICT, electricity, mining, transport, wholesale and retail, and so forth. And the survey was conducted in line with the prescribed international standards by the IMF OCB UNCTAD. So in terms of the global and regional trades, in FDI, for 20 is that global FDI flows grew by 3% and were recorded at 1.5 higher flows to developed economies as the impact of the US tax reforms diminished, which started in 2017. So initially there was a contraction, but over time firms have responded. The flows are now taking place, although the change is quite marginal. In terms of Africa, we see the opposite. The FDI flows actually fell by just 10% to $45 billion. And the reason is that we are commodity dependent, so the prices were low, and therefore demand for commodities declined, and therefore this did not inspire those who would have otherwise invested. And also growth has been declining broadly in Africa, so this also impacted FDI flows. However, according to the UNCTAD World Investment Report of 2020, the projection for 2020 and 2021 is that FDI flows will decline, and for 2020 below 1 trillion, and for 2021 further between 5 and 10%. And the reason cited in the report relates to the impact of the COVID-19 pandemic. However, for 2022, a rebound is projected to, and even then it will just get us back to the pre-pandemic levels. And obviously what to explain or guide the recovery depends on how quickly we get to reach the impact of the current economic policies or impact economies. But even then, there's still potential risks that surround this recovery. They relate to geopolitical and trade tensions. So if these still manifest, we expect that the recovery will be weak and probably prolonged. So now, in terms of the actual results from the responses which are given by the companies that were approached, we look now at the flows and also stocks of foreign assets and liabilities. So in the first part, I'll look at the foreign liabilities inflows. So here we are reporting that private sector foreign liability inflows declined by almost 62% to just about $360 million. And the reason is because of one component of these flows, which is the other investment. And this relates to debt repayments to non-related parties. So that is what is explaining the reduction in foreign liability inflows on a net basis. This occurred in the other investments. But what we note from the screen is that with respect to the components of the flows, FDI grew in 2019 because of related party borrowings to the extent of almost $900 million. And this occurred in the mining and quarrying sectors. But the liability outflows of close to 500 million were recorded in the first half of this year, or sorry, 2020, compared to the corresponding period in 2019, where an inflow of almost 10 million was recorded. So the outflows relate to retained losses and debt repayment by a number of sectors, mostly the mining, manufacturing, transport, deposit taking corporations, ICT, as well as hotel and wholesale and retail. So as a result of the increase in FDI, which was FDI liabilities by almost 13 billion, what we see is that the private sector foreign liability stocks increased by almost 7% to close to $25 billion in 2019. And the FDI share of private sector liability stock is quite significant. So for 2019, it was close to 84%. But in the first half of 2020, the stock of private sector foreign liabilities declined by about 12% to 20 billion. Again, what is explaining the reduction in FDI was retained losses. In terms of FDI liability inflows by type, which you can see from the screen on the from the chart on the right-hand side, affiliated company borrowing was the main form of FDI liability inflow. So again, companies are interacting among themselves. But equity capital improved, while losses of close to $400 million were recorded largely in the mining and the ICT sectors. The AFDI stock mostly consisted of debt of almost $11 billion, and it represents close to 54%. And in the first half of 2020, FDI outflows of almost close to $300 million were recorded, compared to inflows of almost $393 million in the corresponding period in 2019. So the retained losses, debt repayments, and lower equity capital flows in the mining, manufacturing, ICT, transport, deposit taking, and also on retail explain this outturn. So in terms of the, again, FDI liability inflows and stocks by relationship, what you notice that, or what you get from the survey is that direct investors contributed $1 billion, but this was in form of debt. And the direct investors' share of FDI as a consequence was about 90%, which was the largest. Okay. Okay, just move slow. Come on for me. Okay. So since FDI is the largest liability inflow, we can also look at it from the sectoral point of view. So what we get from the responses is that the mining sector was a major recipient of FDI in the form of debt in 2019. And this actually continues to be the case in 2020 as well, the first half. So the inflows to the mining sector were around $406 million, and it represents about close to 50% of the total inflows. The total net inflows of about $480 million collectively were noted in the manufacturing, deposit taking, electricity, wholesale, and retail sectors. So beside the mining sector, the other sectors also received FDI, and those are the ones that are listed there: manufacturing, deposit taking, electricity, wholesale, and retail sectors. But there are also net outflows, which are recorded in the ICT, construction, transport, accommodation, and food sectors. And the reason for that was because of retained losses during the period. So in terms of stocks, so those are the flows. So now if you look at it from the stock point of view, what you notice is that the mining and quarrying sector is the highest contributor to FDI liability stocks. And this stands at about 67%. And this takes the form of debt. Okay, so when you look at FDI, the largest component of these flows are in form of debt, and the bulk of these inflows for debt is in the mining and quarrying sector. But this is also accounted for by the remaining amount by the manufacturing, wholesale and trade, deposit taking, electricity, and to a certain extent, agriculture sectors. So there's still some debt in those other sectors. It's not just the mining sector, although the bulk of it is present in there. But in terms of the flows by FDI flows by source country, what we note for the 2019 is that Australia was the major source, and about $250 million in form of equity and debt came from there. in 2019. This was followed by British Virgin Islands, Ireland, Switzerland, China, and Singapore. But we also note that there were net outflows to the United Kingdom, the Netherlands, the Bermuda, and Bermuda, yes, mostly those two countries. And what is explaining that is retained losses and debt repayments. So this keeps coming up, retained losses and debt repayments accounting for the outflows. Okay, so that was the flows, but in terms of stock of FDI liabilities, so for 2019, relative to 2018, what you notice that Canada, Switzerland, Australia, China, Netherlands, the United Kingdom collectively accounted for close to 70% of the total FDI stock. So most of the FDI that we've received into the various sectors in this economy as of 2019 came from those broadly 6 countries, Canada, Switzerland, Australia, China, the Netherlands, and the United Kingdom. So as I mentioned, the stocks largely are dominated by the mining investments from Canada, Switzerland, Australia, China, as well as the United Kingdom. So if we now look at the other components of the flows that we look at on the balance sheet of the companies that we survey, it's the other investments that include items such as cash, currency deposits, borrowings from non-rated affiliates or companies, trade credits, and so forth. What you notice is that for this particular component, on a net basis, there was an outflow of close to $500 million in 2019, compared to an inflow in the previous year of 2018 of $280 million. Again, what is explaining the outflow is loan repayments. And if you drill down, you note that most of these outflows in the other investment category were in the mining and quarrying sector, where about close to $400 million was recorded. And there are also net outflows of close to $130 million by the deposit-taking corporations, manufacturing, and ICT sectors, as you can see from the chart. But even then, you see that there was still some inflows coming through these instruments in the other investment category. And this went into the electricity, construction, transport, wholesale and retail, as well as agriculture sectors. And most of these took the form of loans, trade credits, and advances, which I tried to highlight as the components of other investments. Oops. Try to move the screen. Be able to, okay. So those are the flows, but in terms of stocks, we note that for 2019, the electricity sector accounted for the largest share at about 38%, followed by mining at 29%, and then you have deposits taking institutions, as well as ICT and manufacturing. Okay, so it's not just the mining, but for the other investment, in terms of stocks now, we have the electricity sector taking the lead through those various instruments under this category. But if you look at it in terms of source country for inflows, you note that China recorded the highest other investment outflows of close to $340 million in 2019. This was followed by the UK, South Africa, Switzerland, and the US. But there are also inflows that came from other countries, that's Macau, Singapore, Kenya, and Netherlands, due to debt disbursements. So we're still getting some inflows despite having some outflows to China and the other countries that I just highlighted. Now, in terms of stocks of other investments by source country, China accounts for the largest share at about 31%. This is followed by the United Kingdom, South Africa, and the Netherlands, notably. So all this now put together, flows, outflows. So how does the private sector debt picture look like? So for 2019, what we noticed that the private sector external debt rose by 4% to close to $15 billion. And this is as a result of loan disbursements. And if you look at the loan disbursements, you note that the bulk of it is in form of long-term borrowings, which stands about 93%. In dollar terms, it's close to $14 billion. There's a smaller component of about $1 billion, which is in short-term borrowings. And most of this debt is from foreign affiliates, and it takes the form of loans. And this stands about $11 billion. But for 2020, the first half of 2020, we note that there was a decline in the stock from $14.6 billion to $14.2 billion. Again, the reason is that there were debt repayments mostly by the manufacturing, mining, deposit-taking corporations, as well as wholesale and retail sectors. So if you look at now private sector external debt by sector, again, it already it tells you that this debt is resident in the mining sector by the nature of the significance of the long-term borrowings. Okay, so the mining sector accounts for about 70% of the private sector external debt. But this is followed by electricity, manufacturing, deposit taking, ICT, and wholesale and retail trade. So there's still debt or by the other sectors of the economy. That's for 2019. For 2020, the picture hasn't changed. The first half of 2020, the picture didn't change. Again, you note it's a mining leading, then we have manufacturing and the electricity sectors dominating. Okay. So the pictures remain more or less the same. Right. On the screen. Please help me with the screen. Okay. Oops. Okay. So in terms of the source country for this private sector external debt stock, the largest country that has invested or which is exposed to these sectors is Switzerland. And this is followed by China, the United Kingdom, Netherlands, Australia, South Africa, and then we'll go down to Mauritius, Nigeria, Canada, and so forth, Bermuda. Okay, so these are the countries where most of this debt has come from, Switzerland. And of course, you can tell from there that mostly this is in the mining sector. So this is the liability story of the companies that we surveyed. How about on the asset side? So we can look at the flows and also the stocks sides. So in terms of the flows, what we noticed is that the private sector assets declined by close to $450 million in 2019, from almost $660 million in 2018. And this reflected the drawdown in currency and deposits, predominantly by the deposit-taking corporations. So most of these reductions in assets were mostly in the United Kingdom, South Africa, and China. However, FDI assets increased to just over $620 million in 2019 from almost $50 million in 2018. And this reflected the higher debt. And the major recipient of this FDI assets was the United Kingdom. And then in terms of the stocks, the private sector foreign assets rose by just over 20% to $3.2 billion. And this is explained by higher FDI assets, mainly in form of debt, which I've just highlighted. And the FDI assets in 2019 rose by $1 billion and from just over $375 million previously. So, Chair, in terms of the takeaway from the survey, on the quantitative side, is that there's a significant growth in FDI inflows into Zambia in 2019, explained by related party borrowings, mostly in the mining sector. So the mining sector is the leading recipient of FDI inflows, but this is also explained by the fact that the other sectors also receive FDI inflows. These are manufacturing, deposit-taking corporations, electricity also, and retail, real estate, and agri. And most of these FDI inflows came from Australia, and it took the form of debt and equity. So as a result of these FDI inflows, we note that the stock of private external debt grew, and most of this debt came from Switzerland. And for this period, what we note that the foreign assets for the companies that we surveyed contracted because of the drawdown in currency and deposits, mostly by deposit-taking corporations, and that was in the United Kingdom, South Africa, and China. Thank you very much.
Thank you very much, Dr. Chipili. For those who are joining us for the first time, the survey basically has two parts. What Dr. Chipili has gone through, the highlights, is the first part, which is foreign private investment, and basically has looked at the global and regional trends, both in terms of stocks and flows, but also the two sides, liabilities and assets. The second part is the investor perceptions part, and that is private investor perception part. Just to note that the government also is an investor, but this one is private investor perceptions on investment climate in Zambia in 2020. And to lead us through the highlights, I have Mr. Innocent Melu, Director, Policy and Planning at Zambia Development Agency. Please, Mr. Melu, you have 15 minutes to do a presentation.
The moderator. Good morning, everyone, and all protocols are observed. Like has been mentioned, I have 30 minutes to make this presentation. So what I'll do is I'll be very brief and straight to the point. I also noticed that from the program, there's provision or room for plenary, which is the question and answer session. Like I've been introduced, my name is Innocent Melu. I'm the Director, Policy and Planning at the Zambia Development Agency. So as ZDA, we will present the qualitative component of the foreign private investment and investor perception survey. Dr. Chipili presented the quantitative parts. Okay, so my presentation is outlined as follows. So I have the introduction, basically trying to provide the context, and then the summary of the findings,
And then the findings are disaggregated by themes based on the questionnaires, based on the questions from the questionnaire. And then there's also the international trade orientation, and then the investor pull factors, and then constraints to increase the investment. And then we look at the financing sources for investors, and then also look at government fiscal policy measures, and then the global events. This is in relation to COVID-19 pandemic, and then monetary policy measures, service delivery by the government institutions, the ease of doing business factors, investment promotion efforts, and the investor outlook. So in terms of the introduction, this presentation highlights investor perceptions regarding issues that influence the investment and business environment in Zambia. So basically, it provides the overall foreign investor perceptions for 2020. It also shows how disaggregated perceptions on particular themes pertaining to the investment climate in Zambia have evolved during the period under review. 141 investors or companies participated in the survey from a target of 250, which gave us a response rate of 56.4%. In terms of the summary of the findings, overall, investor perceptions deteriorated in 2020 compared to 2019. Notable aspects were those on government institutions, service delivery, and ease of doing business. With regards to international trade orientation, here we are looking at the export and import perspectives. The study revealed that the majority of respondents were predominantly importers, that is 41%, while 26% were predominantly exporters, 30% were neither exporters nor importers. In terms of markets for products, 23.8% indicated that they produced for the domestic markets. 9.5% said they produced for regional markets, that is SADC and COMESA. 9.5% again indicated that they produced for Asian markets, while 4.8% was attributed to both Europe and the rest of Africa. With regards to the benefits of membership to COMESA, or SADC, 50% of the respondents surveyed indicated that market access was the main benefit of membership to both COMESA and SADC, while 39.1% and 30.4% perceived access to raw material inputs as benefits of membership to SADC and COMESA, respectively. With regards to awareness on the Africa Continental Free Trade Area, the majority of the respondents, that is 59%, surveyed indicated that they were not aware of the CFTA, while 41% stated that they had knowledge of the CFTA. The survey further reviewed that access to markets, access to finished goods, and access to raw materials were the perceived main benefits of membership to the Africa Continental Free Trade Area by 23.9, 19.6, and 19.6% of respondents that were aware, or that indicated that they were aware of the Africa Continental Free Trade Area. On border efficiency, the survey revealed that 19.6% of respondents indicated that clearing of goods took long, while the majority, 19.1%, indicated that it was reasonable. As can be noted, there was an improvement in perceptions on border efficiency from 57% in 2019 to 19.6% in 2020. In terms of motivation to initially invest in Zambia, market potential, peace and security, and political stability were the main investor pull factors by 78.3%, 70%, and 65.2% of the respondents, respectively. And then regarding the decision to reinvest in Zambia, political stability, peace and security, and market potential were the main factors cited by 65.2%, 65.2%, and 63% of respondents, respectively. In terms of economic and financial factors that influenced investors' decisions to invest or reinvest in Zambia, domestic and regional economic growth were perceived as the main enabler to increase investment by 67.4% and 63% of respondents respectively. The main perceived constraints were exchange rate management, unpaid VAT refund, and government arrears to suppliers by 69.6%, 57%, and 54.3% of respondents respectively. Then with regards to sources of funds for reinvestment, the majority of respondents financed their business ventures through equity, that is 50%, while 43.5% indicated that they borrowed the funds they invested in their business. With regards to the effectiveness of government policy measures, infrastructure development and economic diversification were viewed positively by 82.6% and 80.4% of the respondents respectively. Okay, on the effects of the COVID-19 pandemic on businesses, the respondents indicated that the main areas that it negatively affected were access to markets, that is 7.4%, then access to raw materials, 63%, and access to finished goods, 58.7%. Then with regard to government-mandated policy measures, 69.6% of the respondents viewed the central bank's interventions in the foreign exchange market positively. I think this is a good indicator for bank. Yeah, then the average perceptions of public institutions remained the same compared to, so this is to do with the service delivery by government institutions. So the findings reviewed that the average perceptions remained the same compared to 2019 at about 40%. Then the biggest improvements in service delivery were the Energy Regulation Board at 10.4 percentage points, Zambia Police at 10.1 percentage points, and the Roads Development Agency at 97 percentage points. Then all the ease of doing business indicators deteriorated from 47.3% in 2019 to 43.5% in 2020. I must mention, like in the introduction, that these are what we've captured perceptions from the investor's perspective on the measures and policies that the government is putting in place. If you read the World Bank's 2020 reports, I think we've remained at 85, and we are not doing that bad as a country. Okay. Then in terms of the effectiveness of government's investment promotion interventions, private sector sovereign guarantees and enhancing business registration processes were perceived as the most effective by 87% and 84.8% of the respondents, respectively. I'm sure this should be my last slide. With regards to investor outlook, it's probably the slide before the last one. So with regards to investors' outlook on growth and investment prospects, 45.7% indicated that they would expand their business operations, while 43.5% said that they would maintain current levels of production. 8.7% stated that they would scale down on production. With regards to investors' planned expansion strategies, construction of new buildings and expansion of existing facilities were the main strategies by 32.6% and 32.6% of the respondents. So I thank you and okay. Yeah.
Well, thank you very much for that presentation on investor perceptions. I would like now to call upon Mr. Ernest Monday, the group, Mr. Ernest Monday. Okay, thank you very much. I'd like to call upon Mr. Ernest Monday, the group engineer of TradeKings, as well as the spokesperson, to make a presentation or some remarks. I think the TradeKings was one of the companies that was surveyed. Mr. Monday, you've got maximum of 15 minutes to do that. Please go ahead.
All protocols observed, and the presentation that we are doing is the indigenous investor, the case of TradeKings. On the onset, and on behalf of TradeKings, I wish to thank the organizers for slotting us in, and we consider it a honorable privilege to address this gathering. And we are going to give the successful evolution of TradeKings Group. I take note that the theme today is foreign private investment and investors' perception in Zambia. TradeKings Group is a manufacturing entity, mainly in fast-moving consumer goods. The above theme connects with TradeKings, who are anointed to anchor the Kafue Iron and Steel Special Economic Zone, which is fundamentally designed to grow the Zambian economy through value addition of its natural resources. TradeKings Group comprises of 3 founding directors and shareholders, namely Iqbal Patel, who is the current group CEO, Mr. Khalid Muhammad, the board chairman, and Mr. Ayub Adam. All these are Zambian-born directors. As we are all aware, TradeKings is a flagship company in Zambia, but I need to here outline that the company has a number of vertical distinctive businesses, which are laundry, home care products, food, beverage, and at the end of the spectrum, steel. From the Zambian perspective, who is an investor? A definition that most Zambians will give will be a foreigner with surplus money willing to do business in Zambia. It's a TradeKings perception. In the TradeKings perception, I therefore will tell a story from one angle, and I'll use Muhammad Iqbal Patel as a point of contact. He hails from Mugbudu, Chipangali, Chipata, which is a small trading post on your way to Lumbazi. In other words, Iqbal is merely a simple villager. And fun enough, his highest level of education is nearly from 5. As a schoolboy, he used to buy whatever commodities he laid his hands on, from ZCBC Wholesale, in Kamala, Zambia National Wholesale, and other Indeco outlets, and sell them over the weekend in Chipata, and would be back to school on Monday. And he learned to take advantage of the chronic and acute shortages that were in the country. 1978, when he had completed school, with his uncle, they bought Access Center Shop on Cairo Road, which is just opposite where we are in the Bank of Zambia. And they sold suits from cereals, Piper Clothing in Ndola, and a number of products that came from Livingstone. They later sold this business in 1980. They acquired a plot of land on Palm Drive in Charleston and constructed Universal Bakery from scratch. They entered into a wheat outgrower scheme in the area, and Mr. Khalid used his excellent knowledge of farming and outgrower schemes to work with the populace there. National Milling milled this wheat and was paid by a barter system using the wheat, which resulted in a win-win situation. Later, they bought Ichigayo from AFE and started producing their own wheat. And later, they made another miller, Ichigayo, but this was from salvage scrap from a local engineering company. With the help of Dr. Julius Kauma, who was by then working for National Council for Scientific Research, they constructed a traditional oven using clay bricks. And they charged this by firewood and coal. They later also made a dough mix from scrap by BMS Engineering in Lusaka, which led to improved throughput of their bread-related products. In 1989, our late President, His Excellency, Dr. Kenneth Kaunda, paved way to liberalization. This shifted the business horizon to trading. And as you may understand, that is where the name Trade Kings comes from. But they kept working in tandem with the bakery. They imported a number of products from South Africa and Zimbabwe to meet the Zambian demand. Following the change of government, the new government came up with privatization. And generally, the new owners of these parastatal companies opted to strip the companies instead of investing in them. The group directors saw the niche in the local produced market. Hence, with the difficulty of getting Forex, they felt they could work through import substitution. And this resulted in what is now the company's vision to innovatively invest in manufacturing for sustainable industrialization, job and wealth creation by import substitution and export. This vision is the bedrock of the company, and it led to the establishment of the Kafue Steel, which is we call Universal Mining and Chemicals Industry, and which will anchor the Kafue Iron and Steel Special Economic Zone. Trade Kings, by virtue of this same vision, has invested heavily in the Lusaka South Multi-Facility Economic Zone. Now, with in 1994, Mr. Patel developed a soap formula, which he believed could work out reasonably and compete with Dynamo. He approached a Mr. David Kombe, who once worked for ROP, Refined Oil Products, to experiment the formula and how it would perform in the market. The soap that was produced, the Boom detergent paste, was first produced in a round charcoal garage arrangement in Emersdale. And it was 60% cheaper than similar products that were selling on the Zambian market. The reasons are use of basic homemade equipment, 2, the use of Mr. Kombe, who was an experienced personnel in quality control, and 3, the use of very experienced marketing colleagues in the names of Jeff Staru and the late White Chunga. And later, beverages and steel. So from the 1978 position of having 5 employees, the group has now in excess of 550 employees. So we can see that an investor does not necessarily mean a foreigner or a very educated Zambian or a man with a lot of money. I must point out that Trade Kings has found that we Zambians are very generous, but we do not take them for granted. Hence, in the product range, we work it out to meet all the clientele. Secondly, we participate in corporate social responsibility initiatives. As Trade Kings, we recognize that Zambians are the most important factors in our business. Therefore, we try to promote Utumtemba, and in Lusaka, we bear the cost of delivering these goods to their doorsteps. Over the years, Trade Kings has learned a number of valuable lessons, and these can be summarized as follows. It is important to understand that the past is merely a point of reference and not a place of residence. In other words, we can all be investors past. It is critical to identify the niche market and add value. So we need to find the gaps in the market and build around it through value addition, using local resources. Human capital is one of the most important valuable assets in business, and we need to employ it in a manner that is innovative and adds value. Remember, we rise by lifting others. We need to align our vision with policymakers, who is our government, in focusing on industrialization. And that is how we created the Kafue Steel Plant. And we should remember that we need to look forward with hope and not backwards with regret. We need also to build our businesses organically through reinvestment. This is one of the most serious setbacks in investment in Zambia. We feel when we have created a business, we are there. No, we need to continuously continue investing. We need to face competition as well in the true spirit. And it is important to note that to be successful, you need a family and friends. However, to be very successful, you need competitors. We need also to identify and crystallize our business drivers. For instance, at Trade Kings, we use the 3A principle. Products should be affordable, available, and accessible. Hence, we talk about improving lives in our customer value and product quality of products. And we need to know that there is no elevator to success. We must always learn to take the stairs, which may be
a bit too slow, but it's a route to success. We need also to reserve a bit of our profits for social corporate responsibility. Us as Christians ought to remember that the Bible says God blesses a cheerful giver. And the world is changed by me being an example, you being an example, and not by our opinion. Finally, we need to have a perpetual quest to remain first among all equals in a relentless journey. I want us to look at just one item, and I would like to speak to existing government officials and investors alike. When we look at the Congo and Angola, they are totally dependent on Zambia. And any prudent manufacturer needs to treat the two as part of the 11th province of Zambia in designing the demand and supply. We need also to recognize that value addition, which is manufacturing, is pivotal to growing the Zambian economy and strengthening the Zambian currency. And this is the reason why the Zambian government embarked on infrastructure development. Currently, local manufacturers are being overtaxed. We are being taxed for imported raw materials, and this has resulted in making our locally manufactured commodities uncompetitive within Zambia and for the export markets that I've talked about, the DRC and Angola. We need also to remember that Zambia is a member of SADC and COMESA. And being members of these organizations, with the treaties that we have signed, it entails that commodities that are produced in those countries or manufactured in those countries cannot be taxed to the levels that will make our goods competitive. Therefore, we need to find a prudent way of making our local products competitive for both the local market and indeed the export market. I believe we've had meaningful dialogues with the Ministries of Finance, Commerce, Trade and Industry, and we need to come to a decision of leaving to the new status quo. With these few words, I thank you.
Thank you very much. Thank you very much, Mr. Ernest Mande. What you have talked about, I think for those that are not perhaps resident in Zambia, you may only fully appreciate it if you look at the range of products that Trade Kings is involved in. That is the story of Trade Kings, but it's also a story of manufacturing in Zambia. It's a model of successive transformation from a humble beginning to higher heights. And I think as we prepare for the AFCTC, there is something that we can learn. Now, having said that, we're now at a point where we have to go to plenary. We've got about 30 minutes for plenary. What happens is that wherever you are, you raise your hand on your gadgets. We've got colleagues that will be able to notice that you've raised your hand. We'll then unmute you. And then once you are muted, identify yourself by just your name and preferably the organization that you belong to, but if you're an individual, and then please, the plenary is open. We've got about 25, 30 minutes. Any participants with questions, comments? Hello? Okay, please go ahead. Is that Bishek Kauma? Go ahead with the question or comment.
No, Chair, I joined fairly late after struggling, but I don't have an immediate question so far, but I would like to listen in from others. Thank you.
Thank you very much. Zambia Embassy, Kenya, is something there.
Thank you very much. Thank you very much. Am I audible?
No.
Come again. Am I audible? Can you get me?
Very loud and clear.
Thank you very much for according me the chance to speak. And thanks for the organizers of this workshop today or the meeting. We've learned a lot. I've got two questions. One of them, I think, is directed at the Bank of Zambia, and the other one will be directed at Kafue Steel. Now, for the Bank of Zambia, the government is running Mopani copper mines as well as KCM. I think when are we going to start seeing that revenue stream coming into the Zambian economy? Because I think it is quite on that one. We need to know how much is coming in so that we see where it's actually ending up in terms of development. So that's the first question. The second one is for Kafue.
Hello, we seem to have lost you. Hello? Well, perhaps we can get to Watula from Banjul, and then we can get back to our colleague from the Zambian Embassy. Watula, please go ahead with the question.
Yeah, sorry I was cut out, but I'm back on here. I hope those two questions have been taken note. Thank you very much.
Second question. Can you repeat the question? Second question, please.
The second, both of them or the first one? Or the second one? The second one is for Kafue Steel. He's mentioned about the iron and steel industry that they are supposed to set up. My question is that they've taken too long to set up that iron and steel plant. As a result, we are losing out. We need that plant as a game changer in terms of engineering expansion into Zambia. I was making reference to the old Lenco, which used to run and manufacture so many components. And that is the way they also want to go. But then we haven't seen any movement ever since the iron and steel declaration for Kafue was done by the president years back. So basically they need to actualize the iron and steel manufacturing plant as quickly as possible because it's a game changer for Zambia. Thank you.
Thank you. We can go to Watula. Bonjour, please come in. Watula, can you kindly unmute your mic?
Oh, thank you. Can you hear me now?
Yes, please.
Oh, thank you, Chair. Yes, my comments or rather question is directed to the Bank of Zambia. And I want to make a comment on debt repayment, in particular to sister companies. I've noticed that most of these debt repayments are between, in terms of FDI outflows, are between the sister companies. So now I want to find out, are there any measures that the Bank of Zambia has instituted to curb on interest deductions in terms of, because I've also noticed that these FDI outflows are going to tax havens. So I wanted to find out if we have measures to curb on interest deductions between the sister companies. Thank you.
Thank you. I'd like to have two more questions on the first round to make five. Now, if you're still reflecting, perhaps we can start with the first question. That's the Bank of Zambia concerning Mopani copper mines.
Yes. Thank you, Chair. I think the Mopani question is best answered by the Ministry of Mines. Not so sure if the Minister, so the Permanent Secretary for the Ministry of Mines is present, or we could respond to that. But what we are aware of is that the acquisition process is underway. I'm not so sure whether the process is now complete, and the board has been appointed. So on the basis of that, we expect that the ministry or Mopani itself, through the board, will be making a statement on the expected operations and what will happen thereafter. On the issue of curbing interest payments by related parties, I think the issue is that for this purpose, the purpose of the survey, we are able to pick all the transactions that are undertaken by companies that are established in Zambia, operating in Zambia, and also Zambians incorporated in Zambia, but also operating abroad. So we capture all the transactions that take place with related and unrelated parties and record them for this purpose in line with the prescribed standards. And obviously for us, the main interest is to capture these transactions. The expectation is that the companies involved have followed all the regulations that they are supposed to, that exist in terms of regulations, tax, and so forth. So we don't go into details of that or prescribe how they should do that, but just that these transactions are reported and in turn capture them in this framework for this purpose.
Thank you, Dr. Chipili. I think the other one is Mr. Mende.
Thank you very much. I believe that the question our colleague from Kenya was asking is based upon the economic zone, because Kafue Steel will be merely be manufacturing iron and steel and take this into the economic zone. Now, yes, the president made pronouncements, I think, as he became president, and it has taken a lot of time. One of the reasons why it took a bit of time was the fact that we did not have land. But the president was magnanimous enough and de-gazetted some land, which now is being surveyed. So in a short while, we will be on the ground. In fact, to make even you smile at things that have been happening in the background, ZCCM is the other partner in the development of the Kafue Iron and Steel Special Economic Zone. So this is to enhance our industrial revolution in Zambia by mineral production and adding value either to produce equipment, produce necessary spare parts, produce other materials that are necessary in industry and for our own personal usages, and that can be exported. I thank you.
Thank you very much. I noticed there's an embassy in Rome. But before I allow the colleague to come, let me just try and encourage everybody that as much as possible, let's try as much as possible to ask and comment on the results of the report. Thank you. Ron, please come in.
Thank you very much, Coordinator. It is a very encouraging platform which you have brought forth, and I would like to comment here that it is a pity that a lot of inflows of investment inflows were concerned with only mining, and a big chunk was to do with mining and infrastructure development, and also energy, as it should be, because it is the base. But 80% of the population, 70% of the population of Zambians depend on agriculture, and we saw very little inflow in that area. And the complaint which Rome Embassy has to make is that a lot of investors who are to do with agriculture have been sent to Zambia to link up with their counterparts.
Sorry, perhaps the audible, perhaps if you could turn off your camera, the sound may just improve for everyone to be able to pick. Is that Dr. Kasonde?
Dr. Katema, Dr. Kasonde is late. I'm still around.
Wondering. Thank you, sir.
I was saying that it's a pity that a lot of investors who are interested in agriculture who are sent over to Zambia to link up with partners, either in private sector or in quasi-government or government, come back with not a very good perception per se. They fail to link up, or we fail to link them up when they touch base in Zambia. So that is one complaint that so we want to hear what capital meaning recommendations on how best we can assist.
Thank you very much. Is that all? Thank you very much. Can you have other comments and questions? There is Michelle Kauma. Please go ahead.
Yes, Chair. This question is directed to the Bank of Zambia. We are aware and we appreciate the Bank of Zambia reserves in form of gold, that you are acquiring and securing reserves using our own gold. Now the question is Bank of Zambia and the government ready to use the gold that is being reserved as part of collateral for an investor who may wish to invest in Zambia on government projects, other than using the traditional sovereign guarantees, but some investors would ask to use gold as a guarantee? That is one question. Similar to the same gold, is Bank of Zambia having off-take agreements with potential buyers of gold? Thank you.
We have two more questions, comments. Two more questions and comments, please. Well, perhaps we can tackle the first one from the Kakatema on facilitation. Investor facilitation, I asked ZBA. I think Trade Kings also has a comment.
Thank you very much, Doug, for that concern. As you are aware, as the Zambia Government Agency, we have a mandate to attract investment. People know investment, attract them, and then facilitate whatever it is that they need to ensure that their investment is actualized. So, for example, the way we do it, if we receive a delegation, say from Italy, first, we ask the investors to specify the areas where they want to invest. So, for example, in agriculture, we don't just work as the ZBM. We introduce the investors to other institutions, for example, Ministry of Agriculture, and any other institution where they get the information that they want. And then also, I must mention, I'm also surprised that you are raising that concern, because recently we had the Zambia Business Forum, which was facilitated by embassy as well as your embassy, and the outcomes I think were quite good in terms of investors that expressed to invest in Zambia through greenfield, for example, but also partnerships. And in fact, what we've done is arising from the same forum, we've come up with an action matrix to ensure that the pledges, the investment pledges are actualized. Most of the time, where we have challenges, where we receive challenges, we have investors who come through into the country, but they go to other institutions or agencies that are not the same mandated to facilitate investments. So our plea has always been that as investors are coming through, whether from Italy or others, let's we work together so that they come through the Zambia private agents. And I must assure you, or give you a guarantee that ZDA, we have got the systems, the mechanisms to ensure that investors that are coming through are facilitated. We have the investment, the division that is solely dedicated to investment promotion, attraction, and facilitation. And then for investors that want to export, who are producing for the export market, we also have a division, the export promotion, the export promotion and development division that is solely mandated to help the investors that want to actually export. And then in terms of fostering backward and forward linkages or partnerships, as it were, we have a division that is responsible for enterprise development. So and we encourage, we want to attract investment that is underpinned by the participation of the local investors. And then from the policy and planning. So our role in policy and planning should conduct evidence-based research so that we recommend the policies that will improve the business environment. So I think don't we need to work very positive, but also I must mention that we're already working, because I talked about the recently held virtual business forum, and we know there's some actions, there's some outcomes that require action to actualize. I think.
Okay, thank you very much. Before Mr. Mande comes in and Dr. Chipili, we have only 7 minutes to close the plenary. So we have to be quite on point. Mr. Mande and then Dr. Chipili.
Dr. Katema, we have been working with ZDA, and we will be asking ZDA to send you the concept note on the Kafue Iron and Steel Special Economic Zone. We are not limiting ourselves to iron and steel. Like I said, we have incorporated ZCCM as part of the partners. We are also going into a number of agro-related activities. So what we will do through ZDA, we will send you a concept note. In fact, what we'll be doing, we'll ask ZDA to send the concept note to various embassies where we are represented. Thank you.
Good results.
Thank you very much. Mr. Kalma, the long short of your 2 questions, in the interest of time, is that the bank signed 2 contracts or agreements with Kansanshi and the Zambia Gold Company last year. Kansanshi is the largest producer of gold. And through the Zambia Gold Company, supported by ZCCMIH, we are looking at small-scale production of gold. So the idea is that wherever this gold is produced, this gold will be picked by Bank of Zambia under that agreement. And part of this gold does not meet the monetary standard, which qualifies to form part of our reserves. So the bank has to purify that to the level that is acceptable for it to count towards our reserves. So the process, therefore, is that the bank is there is just there to buy this gold, which is locally produced using the domestic currency, and reserve it. So we're not there to use it for the purpose of guarantee, or if I got the question right from you, whether would someone use that to guarantee. It's up to them if they engage in gold business. For us, the main business is to buy and keep it as a reserve. So that's the long shot of the question.
Okay. Thank you. We can take 2 last questions. Minister of Foreign Affairs, please come in. And the other name we come to announce
Thank you, Chair, for giving me the floor. My name is Ikai Mushinge from the Ministry of Foreign Affairs, and we just want to register our commendation on this initiative. On the issue of circulating information to the diplomatic corps and the Zambian missions abroad, which was just brought up a minute or so ago, we would just like to emphasize and re-emphasize that if that information can be channeled through the Ministry of Foreign Affairs, we'll be grateful.
Thank you. The last one, last question and comment.
Thank you very much. This is Anya Nihulavon from FCDO at the British High Commission. I'm an economist at the High Commission. Thank you very much for the presentation. It's been really interesting. I was hoping somebody might be able to give a little more detail on the inward investment into the energy sector in particular, and any kind of disaggregation of how that investment was flowing. And then I guess just a note as well. I was struck by the comments that Mr. Mande made about the kind of opportunities in the DRC and in Angola for Zambia's exports. And I see in the Economic Recovery Programme that the trade centre at Kasumbalesa and Jimbe are kind of due to be on track this year. So any comments on the progress on those projects would be great as well. Thank you.
Thank you.
Thank you, Chair. So on the last question on inward investments in the energy sector, so the breakdown will be given in the main report. The highlights report is fairly summarized. It doesn't cover most of the components, but the more detailed report will cover those elements. Thank you.
Right. Unfortunately, the time given to us can't allow us to go beyond 10:50. But I believe that if there are any follow-up questions, details, that could be channeled to the Bank of Zambia as well as the Zambia Development Agency. I think the most important thing for me as a moderator is to use these statistics that have been disseminated. This is basically an investment, and the only way we're going to make a change, we need to make the country a knowledge society, a society whose decisions and policy making is based on strong statistical foundation. More often than not, we finish the dissemination and thereafter we forget about it. At this juncture, let me call upon Mr. Mkula Makasa, Director General of Zambia Development Agency, to make his closing remarks.
Good morning, everyone. The permanent secretaries and other senior government officers present, the governor of the Bank of Zambia and the monetary authorities, the interim statistician general, Zambia Statistics Agency, ambassadors, high commissioners, and cooperating partners, captains of industry, members of the press corps, distinguished ladies and gentlemen. The findings of the 2020 Foreign Private Investment and Investor Perception Survey have been well presented and eloquently discussed. As explained by the presenters, the circumstances under which the study was undertaken were extremely challenging due to the COVID-19 pandemic, which exacerbated the country's macroeconomic constraints by limiting business activity, freezing supply lines, and reducing availability of capital investment, among others. Chairperson, overall, the findings reveal that despite current economic constraints, Zambia remains a preferred investment destination due to its potential for increased market access, including peace and security, among others. So, notwithstanding its competitiveness in the global FDI market, investors indicated that exchange rate management and paid VAT refunds and government arrears to suppliers remain significant impediments that affected their the plans of business enterprises to reinvest in the country. Similarly, perceptions on the ease of doing business and service delivery of public institutions remained low. In reality, Chairperson, government is fostering strategic interventions to restore the economic growth trajectory as projected in the National Economic Recovery Plan. Therefore, public institutions need to continually engage and inform the private sector on the various strategic interventions being implemented. The Zambia Development Agency, alongside our economic development, institutions, will effectively respond to the findings of the survey by implementing interventions that will enhance performance of our roles as the interface between the private and public sectors. Chairperson, ladies and gentlemen, in conclusion, allow me to thank our partners, the Bank of Zambia and the Zambia Statistics Agency, particularly for providing human and financial resources for the survey, particularly the technical research teams from the three institutions that managed to synthesize results under very challenging circumstances. I'm pleased to note that the research team has identified the need to adopt the use of a simple aggregated metric that the country can use to compare investor perceptions from year to year. I eagerly anticipate the rolling out of this metric in the year 2020-2021 survey. Last but not the least, Chairperson, distinguished ladies and gentlemen, I wish to appreciate the participation of the private sector in this workshop and during data collection. The information that you provided to the team will allow government to adequately respond to your expectations by tailoring policies and interventions aimed at creating a conducive environment for your growth. Chairperson, ladies and gentlemen, with these remarks, I officially close the workshop. I thank you and God bless you all.
Ladies and gentlemen, I'd like to thank you for joining us for today's event. The 2020 survey on foreign private investment and investor perceptions in Zambia. I'd also like to thank our able speakers from the Bank of Zambia, the Zambia Development Agency, as well as Trade Kings for making the time. And of course, our able chair, our session chair, Mr. Malanga Msepa from the Zambia Statistics Agency. This meeting wouldn't be possible without you, the viewers, so we'd like to thank you from wherever you join us in the world. We did hear some questions from Italy and Kenya. So I'd like to thank you all. Just for your information, the full report as well as the two presentations given today will be available on the Bank of Zambia website at www.boz.zm. Once again, I'd like to thank you all. God bless, and until next time, please do stay safe. Thank you.